Today's forecast, the same type thing. I'm going to share good news, and we'll definitely highlight the good news, but we're not going to have as good a year as we had in the past year. So let me kind of get to specifics. So we're calling for the expansion, record-long economic expansion that we've enjoyed now for several years to continue in 2020. That is the positive news. But the more negative news is that we do anticipate that growth in terms of GDP and job growth will slow this year. So positive side, economic expansion continues. On the more negative side, we're going to slow in terms of our growth. There are 6 forces that we are counting on to help fuel the economic expansion this year. First, consumer spending will be the most important driver of our economy this year. As long as consumer spending continues to grow, this record-long economic expansion is likely to continue. Second, the Federal Reserve will continue to support the economy by lowering interest rates. We'll talk a little bit about that in a few minutes. Third, home building will increase, and that obviously is good news for the construction industry and others. Fourth, there are a large number of projects in our economic development pipeline. Those will continue to be built out this year. That will provide a solid push to our economy. Fifth, higher defense spending will be very good for our state this year. That will be very good for this area. And then finally, above average population growth, that has been and is a key driver of our economy, and we'll see good population growth in 2020 as well. Now, despite these powerful economic drivers, we do anticipate the economy will slow this year. That's because the economic headwinds have also intensified. We do think that the risk of recession is higher now than it was last year. It is lower than what we anticipated in December because of the Phase 1 agreement. But the risk of recession we estimate is about 40% this year. On the positive side, we are not predicting a recession in 2020, but it is true that the risk of recession are higher this year than they have been in more recent years. Despite the recent de-escalation of the trade war that began in mid-2018 is the main recession risk that we see, as well as the strongest economic headwind. There are also other risks to economic expansion as well. The main domestic risks that we see include the possibility for a stock market correction, policy mistake by the Federal Reserve, or a leveraged loan meltdown. There's also been an inversion of the yield curve. We'll talk about that in a few minutes and what that may signal or may not. And then geopolitical risk abound as well. Obviously, tensions in the Middle East as well as implications for Brexit. So let's take a look at some numbers. So our